Last time we learned about what? Presentation of financial statement in connection of what? Earnings or something like that. I don't know. What did we learn last week?
Organization of information in financial statement.
Okay. Not even the articulation of flow of information in financial statements. We didn't go to the income statement. We did. Okay. Where did we stop last time? Sam is not fond of writing short notes, so it's difficult for you to know where we stopped. Ah. Mm. Mm. Presentation of financial statements. Uh-huh. Okay, so what did we talk about on presentation of financial statements? Because that's the main topic, but we have subtopics on the presentation of financial statements.
We're seeing an example there.
Okay, of the financial statement. Uh-huh.
The layout of the information.
Good. That's what I was saying to say. The university wants us to know about the presentations of financial statement. But when we go to the three, if not four, first topics, subtopics of financial statement presentation, we look into it as if they are the same things. I remember we are saying what the first subtopic is what? Organizational information. The second one, information flow, articulation of the financial statements. And then the third one is what? This information flow. The fourth one is what? Tax and changes. Okay, the other one is what?
That's it, under that one.
Okay, but okay. Let me go back to my presentation of financial statements in the course outline. We have one, organization of information in financial statements. The second one, articulation of financial statements. The third one is information flow among financial statements. And the fourth one is income statement geography, isn't it? Income statement geography. You don't have that one? Okay, but then give me the flash. I should also give you the course outline, because the course outline, you have it. She's going to send on the group. Because I see as if those four topics are related to each other, because if we talk about the wait for it. So you are going to send to your friends. So we were on the presentation of financial statements. When we were learning last week or the week before in connection of presentation of financial statements, we said what are disclosed in the financial statements? What items are disclosed in financial statements? Mhm. Okay. The other thing, items in the financial statements. Come again. Assets. Thank you. That's in the balance sheet. Abilities. Cash flow. Okay. So those are some of the items that can be found in the financial statements. And then we continue to say, how can we identify the financial statements? Which are the things that can make us identify that this is a financial statement? Simple things. What? How can we identify a financial statement? The name of the film that you are reporting or the entity. Good. The other thing.
The name of the financial statement itself.
Okay. Or balance sheet. Good. Then the other thing. Period prepared sum. The other thing. Debt. Good. Debt of that. The other thing. Presentation currency. Is it? Maybe it's a multinational company. Is it? Yes, you are supposed to indicate the currency that you are using. How about level of rounding? What do we mean when we're saying level of rounding? Level of rounding. Yes, in millions. Then you write the figures. Because some of the figures, us as the financial reporters, maybe we're in a very big company where figures are very big that we cannot just write them as they are. We're supposed to indicate we're writing in millions. Okay? So level of rounding is again very important. The other thing that we should also not forget, notes. We have to put notes in our financial statements. Why should we put notes, Augustus?
To help the ones that are going to review it or read it to understand everything. Because there are some things that cannot be indicated in the statement, but it can be.
Okay, yes. Okay, yes. We should also think that those that are going to read are not, yes, they are not professionals like we are. Understanding of our language is a bit difficult, but when you put notes in the financial statement, understanding is easier. And how we have reached to such figures that we have put, because you put a note to say, there, this is what I did, for you to understand that that is the figure. The reporting period, very important, that we are supposed to write the reporting period as at 31st December of 2024. Is it possible for a financial statement to be presented before a year or after a year? Augustus?
I think both ways are
Good. Yes, both ways. We can. Yes, we can. It will depend on maybe the reasons we're going to focus on. For example, we are talking that management has said we are going to present. You have no option. You are supposed to follow what management has said, that we are going to do that. Okay? There are other things, like let's say you want to get a loan from a bank. They want to have at least a snapshot on the presentation or on the financial statements. Then you can report just to go and get a loan at the bank. Okay? Sometimes you can present basing on, let's say, changes of policy. The policy has changed. And yet, when we are reporting, we're supposed to compare between years, isn't it? Or when we're presenting, we're supposed to compare. Therefore, we are going to compare the equivalent period of the time that the regulation or the policy was the same. Okay, so it can be possible for us to present either before or after 1 year. Why is it very important for us to present the financial statements within 6 months after the end of the year? Why is it important to us that we should present financial statements within the 6 months of the end of the year? They say this is a ruling in accounting that when you are presenting the financial statements, you are supposed to finish before June. Then you present. Why is it important to us? Why is it important? It's useless. Why then? We can even leave not even reporting within 6 months. Why is it important, Dorothy?
So that the information should be relevant.
Should be relevant. Mind you, the currency, inflation, and all the like can make the values change. So we don't want to be affected on the financial statement. We are supposed to report after 6 months of the year that has ended, of the financial year that has ended. So it depends on, come again, dear.
Is it a legal requirement that every single company?
You can report before that, but not after that. It's a legal requirement. Why? Because we don't want us to report fake figures. As I've already said, when you compare last November to date, the values of commodities have gone up. Why? Because of the devaluation that we had, a very big one. In fact, of course, people say that other devaluations have gone, but we have not noticed, but you just notice that things are going up. So those are some of the things that we don't want to report figures that are not real. We want to report the figures that are approximately that. Yeah, so that's why we report within 6 months of the end of a year that we're reporting. So we were on an example of the financial statement or the financial position which we had, which is a balance sheet that we saw last time. And we discussed that one page. What is that page? Okay. $38. Another question, why should the balance sheet balance between the assets and the liabilities? Always we balance, isn't it? Yes, why should they balance? It's a principle. It's a requirement.
I think, but then, because we have that equation, right? Where it says capital is equal to assets minus liability.
Yes.
So obviously it has to balance with.
It's an equation that is our principle that we're basing on, that they have to balance. If they don't balance, it means you are not there. Sure. So it is a principle for us to have equal figures between the assets and the balance, the liabilities. So those are some of the things. Of course, our book specifies that we have to indicate what are the information that are supposed to be on the face of the financial statement. That is what we learned last week, and then today maybe we should. This is page, what page is this? Comparing the same years, is it? No, now it's different. Now it's 7 and 8, is it? Last time it was 6 and 7. Now it's maybe 2017 and 2018 of the same company's profit and loss account. 43. So we have always, when we're talking about profit and loss account, we start with the revenues, is it? Yes, how much is what we have sold, the amount we have sold on any business. So we start with revenues, and then on revenues we are supposed to subtract the cost of sales, and then we come to gross profit according to that. And then we have other entries that have been put there. There's other income that are there, have been put. Also distributing costs, where we have negatives. It means we didn't get any profit, is it? we were just distributing, and we had even exceeded the budgets that we had. Administrative costs, again, also other expenses that we are having, finance costs, and then we have profit before tax. Profit before tax. Then after that, we have profit for the year from continuing operations, and then after that, we have income tax expenses that are there, then profit of for the year for the continuing operations, and then we have loss of the year from discontinued operations. What are discontinued operations? Of course, we're going to learn about that because it's part of the course outline. Discontinued operations.
So maybe you started a project and then you didn't see where one to stop.
Mm-hmm. Dorothy?
I wanted to say the same in connection with what we were reading.
Okay.
That maybe the decision has been made
Mm-hmm.
to stop a certain line production.
Yes.
So maybe the machines and
Mhm.
the line
Mhm.
that were used in that production line are sold.
Mm-hmm. So we're not continuing that. That means it has stopped. Yes. Not only that, we also have a very good example where we can talk about, let's say, selling an asset, a scrap asset. I thought she wanted me. Jane, I thought you wanted me. Okay. But how are you? I'm fine. Yeah. In fact, I should be not be coming there, let's say, occasionally. But I will send my forms today because this is my last day before. So I think that's it. I will leave the forms with the Frank. Yeah, good. Thank you, nice. So we are saying that discontinued operations, there are so many examples that we can give that. How? We can think about, let's say, selling of a scrap asset. That asset is not going to be seen in the what? In the books of accounts because it has reached its life cycle, is it? So it's going to be sold, and that's the end, discontinued operations that are not going. There are so many things. Sometimes there are other things or other activities that can happen once and the end. Okay. For example, I can just maybe take you back to COVID. Okay. It didn't continue. For example, the masks, are they still sold? I don't know, maybe they are, but as they used to. Okay, so those are some of the examples that we can give when we're talking about discontinued operations or discontinued activities of the company. So then we go to the profit for the year after subtracting the tax. Then that is what we have. Then we go to the other comprehensive income that we have. This is a very big company. We have exchange differences on transacting foreign operations. It means it's an international organization, isn't it? Yes, it has branches in so many countries. So that is what we are learning. And then we go up to the end of that part where we are seeing that the figures are the same with the figures that we were looking into the revenue side, isn't it? 121, 250, 121, 250, 96. No, that's not 96, but 65 and 65, is it? Yes, so it is also again balancing according to the principles that we normally have. So that is just the geography of the income statement according to the course outline. They are saying income statement geography. How do you narrate? How do you go about it? So it depends on company to company because other companies are very small, that the transactions are not going to be as many as we are seeing. But because we are big, we are supposed to see a big organization also, so that we should understand more on that. So it's just a matter of understanding how we go about the income statement, which is the profit and loss account, and then the balance sheet, which we learned last week. Any questions?
And
Yes.
so during exams,
Yes.
you'll be giving us
That is a question I'm afraid everybody asks me that. Yes, ask please. I know what you want to ask.
You're already afraid.
No, I know.
Okay, I wanted to ask you, during exams, are we going to be required to solve these things, or we just
No, we are just
Just
knowing the layout and the information that is involved. Not only that, even the geography of income statement, you as the reporters, you should know them. Yes. You just have to know how we report, and no need of calculations. No, 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 no. In maybe decision making, there maybe we can have something, but normally we don't. But in asset financing, those that are going to be in fourth year, those you need some simple calculations, but not in reporting. No, 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 no. Sure. I know everybody, after finishing this topic, always people talk about that.
You know, the reason why we ask is because we're just being given the layout. We have not.
Oh, you have not
told
practiced.
how, yeah. So,
But you have. In second year, you did this.
yeah, but maybe it's different in this.
No, no, no. You know, accounting principles are the same. Accounting principles are the same. Yeah. So that is that when we're talking about the three or four that the university wanted us to know about: presentation of financial statement, the information involved, the articulation of the financial statements, where we have seen two, which is the balance sheet and then the profit and loss account. Also, the information flow among the financial statements that we have seen, and again the income statement geography that we have seen. Then we should continue to sustainable earnings as the subtopic of our presentation of financial statements. Sustainable earnings. Sustainable earnings. What are sustainable earnings? Earnings. Sustainable earnings. The university wants us to know about sustainable earnings, so that we should know them when we are presenting our financial statements. Sustainable earnings.
In terms of the company, I would say those might be like maybe a portion of the earnings, or a portion of the earnings of the company that is there and is expected to be maintained, and the company grows on them.
Good. Good. So when we're talking about the sustainable earnings, we're talking about the activities that are in long term for the company to grow. That's as easy. So we want to look into the sustainable earnings or financial statements and sustainable earnings because we are talking about the presentation or financial statements. Financial statements for the sustainable earnings involve the showcasing of how financials reflect the company's long-term sustainable and growth. So we are talking about the how we can showcase or how we can write the sustainable earnings in the financial statements. Sustainable earnings. Maybe we should give in what can be the examples of the sustainable earnings for the company. Examples?
You're looking at long-term things, right?
Yes, long-term things that make the company be sustainable, but it's growing.
And the core of the company be
Yes, but minimize, not generalize, should not be open-ended, but it should be straight to a point.
maybe credit witness.
Come again?
Credit witness, like a goodwill of the company.
Okay, sustainable, yes. And not only that, um, uh, when the reputation is very good, it means the company is going to grow and the people are going to be telling their friends, let's go there. This is a very good university. Let's go and enroll from there. So, sure, those are some of the things that we should think about. And for the financial um, uh, statements, we are talking about the things that we are supposed to show in the balance sheet and the income statement. So sustainable earnings are very, very important to us, that we should know that they are the ones that make the company grow. So the meaning is sustainable earnings are net income that is expected to reoccur on a yearly basis. Because there are other things that we have said that discontinuing, that they are not going to continue, but these reoccur. Okay? The firm can plan based on these earnings because they are expected to reoccur, unlike the non-recurring earnings, which may be once off, that is not expected to again occur in future. So below the earnings, they have written non-recurring and recurring. So it means as we're learning for sustainable earnings, we're also learning those other subtopics that are in the financial statements. They're telling us that the non-recurring earnings are those that are there for once off and they don't come again in the future. Yeah, so that is what we are talking about when we are talking about the sustainable earnings. So account, come again.
Also, subscription fees that are paid, for example, registered students.
Yes.
They will maybe
Yes, yes.
We are required to pay subscription fees.
Mm-hmm. Once in a year.
Yeah.
Mm-hmm.
Can that be an example?
Yes, it can be. It can be maybe a bit where we can have problems of answering to say it can be because the other year is going to come again, isn't it? But we're talking of such, in such cases that it will not come again in future. Okay? It's there and then it ends. Maybe we can think about, let's say, maybe the university is thinking to sell the bus. Okay? They don't have two buses, they have only one, but they're saying, ah, no, we just have to sell it. Then they will sell it. It will not appear again in the books of the university. Yeah, it means it has ceased and ceased for all. If they're going to buy another bus, it's another different one. It's not going to be this one. So that is what we are saying. But maybe something like that, we can say yes. Sometimes we can say no, because the other year you're supposed to subscribe again to say, I am, you are a member, that I am supposed to give you this money again. So I think in such cases, we can say those are recurring because they are going to be coming yearly. But some of the cases that comes and they don't recur in future, those are the activities that we are saying. Accounting measures sustainable income by adjusting the reporting net income for any irregular items that are not expected to reoccur in future. So irregular items include discontinued operations. So recurring and discontinued operations are almost the same. Non-recurring and discontinued operations are the same because they're not going to come again. So these are extraordinary items, changes in accounting principles, and prior period adjustments. So these are some of the examples that we can give when we are talking about discontinued operations and the non-recurring operations. Sam, is it understood? Sam normally can be in class, but he can't be getting it. Wadwara? Today? Oh, sorry. What is the problem? Always when you have flu, be doing as Dorothy is doing. But you should be taking a bit warm water. Okay? Flu is going to go. Okay? Sometimes you just have to gargle water with salt just to clear the throat out because it's windy sometimes. You young boys, you are fond of being somewhere where we cannot mention, but you know. So please be having warm water always for your clearing of the throat. And sometimes flu comes with the pain of the body if you don't eradicate it so quickly. So please be doing that. So sustainable earnings represent the level of earnings and the growth in the level of earnings expected to persist in the future. So this concept indicates the extent to which current earnings are expected to continue and the growth level of the company will be maintained. So this is what we mean when we're talking about sustainable earnings. Sustainable earnings. So what are we saying? We're saying that sustainable earnings then are very important into presentation of financial statements. How are they important? How are they important? How are they important? How are they important?
Importance of sustainable.
Earnings.
The company grows on such things.
Yes.
The company has to have something that is known. Because when things come sideways, they will always have a starting point. Well, okay, we can go on this one.
So they are very, very important to us as reporters. Mind you, if you are talking about growth of the company, those are some of the things that make the people that can give us loans depend on. To say, okay, is the company going to be able to give us back our money? Yes, okay. Then what are their sustainable endings? So that is very, very important to us, and not only that, to the organization also, because we are going to know, or our people that we are going to borrow from, or even banks are going to be saying yes, we are going to be given back our monies, because they are showing that there is the sustainability in their earnings. So us as the reporters, we should know all those, because we are going to be involved in such that we are supposed to give or report on how our sustainable earnings are for us to be given a loan for growth. Then we go to earnings, portions of earnings, recurring versus non-recurring. This is part of the course outline that were given after understanding the earnings that we have just said. What are recurring earnings? We have talked about sustainable earnings. Now, recurring earnings. It's the course outline, isn't it, Dorothy? Oh, okay.
But what you have shared should be.
It is there. We are going to see it. Recurring earnings. What are recurring earnings? Recurring earnings? Not far from what we have learned. Of course, even the book has specified that it's a bit crucial to distinguish between recurring and non-recurring components to get a clear picture of the company's sustainable performance. But look at this definition now. Recurring earnings are the portion of a company's profits that are generated from its core operations and are expected to continue over a long term. So that's why I'm saying it's not far from what we are learning, but because the university requirements want us to understand about them again, recurring earnings, recurring earnings. These are the portion. These are the portion of, these are the portion of a company's profits, of a company's profits, that are generated from that are generated from its core operations. Core operations, and are expected to continue over the long term. And are expected to continue over the long term. Over a long term. So that is the recurring earnings. Can we give an example of any company for its core operations? Any company with its core operations? What is it? Okay.
Core operations is
Good. Augustus?
I'd say 1 billion Malawi.
Yes.
Because its whole population is all about kids. Then it ends from that one.
Oh, they are all about kids.
Yeah.
I didn't know. But they are, do they sponsor?
Yeah.
Oh, I didn't know. Okay, they are concerned with the kids.
Yes, very nice.
Mm.
Operations are just outside there.
Okay. Core business of any company that you know? You don't know. I talked about Sobo. You can talk about it. We have so many. We have got companies that make soap. We have so many companies. Their core business is making soap. The core business is making drinks, soft drinks. Yes. So there are so many of them. So these earnings are considered sustainable. So now you see the relationship between recurring earnings and sustainable earnings. Considered sustainable and indicate, not first up, and indicate and indicates the company's ongoing performance. Why should we talk about them in the presentation of financial statements? We have to, because they are the activities of the company that is going to be generating the profit that we are talking about. So, or we are going to present. So we cannot leave the recurring earnings or sustainable earnings in any way when we are presenting our financial statements, because those are very, very important to us. that they should be seen in the financial statements. So here they want to us to just revise only the components of the income earnings or income statements. What are the components of that? Just only an involvement discussion, or else we can say that discussion. What are the components of statement of income or income earnings? What are the components?
Components of statement income.
Statement of income, profit and loss account. That's what we want to talk about.
When we talk about components, we're looking at how it's generalized.
Yes, generalized. Just to say, what do we start with? Revenue. That's a component.
Revenue is for sale, right? Yeah, it's just sale.
So we have revenue as a component of income statement, is it? Then we have the other thing, gross profit, is it? Yes. The other one, even the, come again? Expenses, yes, but we have the operating income, earnings before what? Interest and tax, is it?
Operating income is income statement, or is it on balance sheet?
Operating income, according to here, I think they are saying in connection of profit before tax, something like that. It's
More
on
like
the net, yes. Then we come to the net income at the end. So they're just generalizing to say these are the components of what is involved when we're talking about profit and loss account. Then we come to non-recurring earnings. What do you think are non-recurring earnings? Non-recurring earnings. Non-recurring earnings. These were saying are the activities, the core activities or operations of the company that are ongoing, that show performance of the company. How about non-recurring earnings? Non-recurring earnings.
About these being the core operations,
Maybe
those are just, I say regular
okay.
activities that just come, and they're likely not going to happen again in the near future.
Good. Yes, they're regular activities, but they're not going to happen in the future. That's why I was saying, because the university wanted us to know them, then they are almost the same things that we are talking about when we are talking about recurring, non-recurring, continuing and discontinuing operations. So these are some of the things that we should not, in connection of presentation of financial statements, that we are saying. So, for example, we should maybe have the definition on non-recurring earnings. Non-recurring earnings are those derived from activities or events that are not expected to happen regularly. Okay, we should take it. Non-recurring earnings. These are earnings that are derived These are earnings that are derived from activities or events that are not expected to happen regularly, or events that are not expected, or events that are expected to happen regularly. These items can significantly impact earnings but do not reflect the company's ongoing operational performance. Do not. Do not, let me say that. Do not reflect the company's ongoing performance. These can be, components of them can be one-time gain or losses. Okay, one-time gain or losses, that's the end of it. It's not going to appear again. These are the non-recurring component or earnings. Profits or losses from unusual or infrequent events such as the sale of an asset, litigation settlement, or reconstructing charges. So all those examples when we're talking about non-recurring earnings, one-time gain or losses. And then we have discontinued operations. That's another thing that we can take it as non-recurring operations. Discontinued operations. So that is another subtopic in the same course outline. Discontinued operations where earnings from business segment that have been sold or shut down. We are not going to have it again. Shut down. We close it. Example, sale of an asset, scrap. We are not going to show it in the balance sheet again. It has gone and gone for good. It's not going to come back. The other thing can be extraordinary items. These can be rare and infrequent events that are not expected to occur regularly, such as natural disasters. I gave in an example of COVID-19 to say there are some activities that were there that time that ended. So those are some of the non-recurring earnings. Non-recurring earnings. So recurring and non-recurring earnings, when we want to evaluate them, we are looking into the financial health of a company when we are comparing the two. recurring and non-recurring. You as a reporter, you're supposed to know why we talk about recurring and non-recurring earnings. We want to see the financial health and the performance of an organization.